Today, we are going to be talking about debt. Now, we all know and have experienced debt before. Most of us. Whether it's from credit cards, student loans, mortgages, or anything like that, debt affects almost everybody. According to the Federal Reserve, U.S. consumer debt is at an all-time high, over $11 trillion. This buildup of debt comes from student loans, vehicle loans, home mortgages, and credit cards. Credit cards constitute almost $900 billion of that total debt. The average American household owes $15,000 in total credit card debt, down from 2009, when the average home owed over $19,000 in credit card debt. A significant portion of that reduction was because of charge-offs, not because of people being able to pay off their debts. The high charge-off rate has led to stricter lending standards that have contributed to a fall in total credit card debt. According to a survey done in February, only 55% of Americans asked have more in emergency savings than they have in credit card debt, which means they are not able to pay. And that leaves nearly half of America one emergency away from financial disaster. And so now we gotta get into student loan debt. According to the Federal Reserve, outstanding student loan debt has topped over $1.1 trillion in April. It's the second highest amount of debt owed, second only to mortgages. NBC News reports that the average student graduates with nearly $26,000 in student loan debt. 37 million Americans have student loan debt, and according to Bloomberg, 1 in 10 Americans have defaulted on that debt, and 1 in 7 Americans is being pursued by a debt collection agency. We're going to get into that later. High cost of college, combined with the poor job market, means that the number of defaults will continue to rise. High levels of student loan debt have the effects of delaying graduates from buying homes, new cars, and starting families. The money used to pay these debts does not help to grow the economy whatsoever. According to the Economic Policy Institute, the unemployment rate for young recent college graduates, and that's ages 21 to 24, who weren't furthering their education, stood at an average of 8%, 8.8%. And that's unemployment rate for students 21 to 24 is at 8.8%. That is higher than the national average. The unemployment rate for their underemployment rate, for young graduates is at 29.9%. That means you are working at a job that is not made for your for your degree.